London, October 2025. Under the cover of darkness, heavy cargo planes touch down at Heathrow Airport. They are coming from Shanghai. They are not carrying electronics. They are not carrying silk. They are carrying 660 tons of silver. Why? Because the vaults of London, the financial heart of the Western world, were running dry. To prevent a complete collapse of the delivery system, the West had to beg the East for metal. I have covered commodity markets for years. I have never seen anything like this. When the world's largest financial centers are cargo planing metal across continents in an emergency, that is not a bull market. That is a crisis. The Fed just cut rates today, throwing gasoline on the fire. And right now, as I record this on December 10th, 2025, silver has just shattered every record in history, $61.86. That is a 100% gain in a single year, beating stocks, crushing gold. The headlines are screaming bubble. The skeptics are screaming crash. They say we have seen this movie before. They ask, is this just the boy who cried wolf? I am here to tell you, the wolf is finally here, and he is hungry. To understand why 2025 is terrifying, you have to look at the graveyards of the past. I have seen this movie 3 times, and every single time the ending was a disaster. Ghost number 1, 1980, the Hunt brothers. 3 cowboys from Texas, Nelson, William, and Lamar, decided paper money was doomed. They tried to corner the market. They bought 100 million ounces, roughly 1/3 of the global supply, using borrowed money. They pushed silver from $6 to $50, a 700% increase in 12 months. Tiffany and Company was so outraged, they took out a full-page ad in the New York Times condemning the hoarding. But it wasn't real demand. It was a casino bet. On March 27th, Silver Thursday, the regulators changed the rules. The Hunts failed to meet a $100 million margin call. The market imploded. The Hunts lost $1.7 billion. The price crashed 90%. The lesson? You cannot fight the Fed, and you cannot win with leverage. Ghost number 2, 2011, the quantitative easing panic. The world was reeling from the 2008 crisis. The Fed was printing trillions. Silver ran to $49.45. This time is different, everyone said. We have real inflation. But it was driven by speculators, not factories. On May 1st, 2011, it all fell apart. It crashed 30% in 5 days. Investors who bought the top waited 13 years just to break even. Ghost number 3, 2021, the Reddit squeeze. An army of keyboard warriors tried to fight the banks. They pushed silver from $25 to $30. It lasted days. It fizzled in weeks. Why? Because you cannot squeeze a $1.5 trillion market with hashtags. 3 rallies, 3 crashes. So why is 2025 different? The difference between then and now isn't sentiment, it is geology. In 1980, the vaults were full. In 2011, the vaults were full. Today, the vaults are hollow. I have tracked the numbers, and the math is terrifying. For 5 consecutive years, the world has consumed more silver than it mined. The numbers are staggering. The projected deficit for 2025 alone is up to 215 million ounces. The cumulative deficit is over 1.2 billion ounces. That is not a typo. 1.2 billion. We have eaten through the strategic reserves of the last 40 years, and now we are scraping the bottom of the barrel. Shanghai inventory levels have plummeted to their lowest since 2015. They are draining 29 tons per week. The market is in backwardation. That means traders are paying more for silver right now than for future delivery. That is the ultimate signal of panic. Mining production is falling. Why? Because 70% of silver is a byproduct of zinc and lead mining. You cannot just turn on a switch and get more silver. Opening new mines takes years, but while supply is dying, demand is exploding. This rally isn't about coins in your drawer. This is about the infrastructure of the 21st century. Three forces are devouring silver faster than we can dig it up. Force number one, solar. China is building solar farms the size of Texas. This year alone, solar panels consumed 200 million ounces. That is 20% of all global silver. And here is the critical part. It is not economically viable to recycle silver from old panels. Once that silver is in a panel, it is gone for 25 years. It is eaten. It does not come back to the market. Force number two, electric vehicles. Every EV uses up to 50 grams of silver in contacts and heavy electronics. That is 2 to 3 times more than a gas car. With 20 million EVs hitting the road this year, that is hundreds of millions of ounces leaving the vaults forever. Force number three, the AI revolution. Every AI training cluster, every 5G tower, every chip fabrication plant, they all require silver. The AI boom isn't just happening on screens, it is happening in data centers packed with physical metal. In 2011, industrial demand was half the market. Today, it is over 60%. These buyers are not speculators. Samsung and Tesla don't care about the chart. They need the metal to build their products. They are competing for limited supply. That is not a bubble. That is a procurement crisis. Does this mean silver only goes up? No. Even when the fundamentals are perfect, the market can still kill you. Here are the 3 landmines waiting to blow you up. Risk number 1, recession. If the economy tanks, factories stop building. If Tesla sells fewer cars, they buy less silver. Remember 2008? Silver crashed from $20 to $9 during the financial crisis despite the fundamentals. A deep recession could kill the industrial demand story overnight. Risk number 2, the rules change. If the banks get squeezed too hard, they will call the regulators. They will increase margin requirements to force liquidations. They did it in 1980 against the Hunt brothers. They did it in 2011 to kill the rally. They will do it again. Never underestimate the power of a stroke of a pen. Risk number 3, you. Silver is up 100%. A 20% correction is normal. If silver drops from 61 to 48, will you hold or will you panic? Also, high prices eventually cure shortages. At $60, mines that were closed become profitable again. Supply will come back, but it will take 2 to 5 years. Can you wait that long? So, is the wolf real? Yes. This time, the shortage is real. The airlift was real. The deficit is mathematical. In 1980 and 2011, smart money was selling the top. In 2025, smart money isn't selling. Smart money is panicked about securing supply. But let me leave you with a quote from the economist John Maynard Keynes. Markets can remain irrational longer than you can remain solvent. We could see $80, we could see $100. But the path there will be violent. It will shake you out. You can be right about the fundamentals and still lose everything on the journey if you use too much leverage. If you are waiting for a pullback, look for the $48 to $52 range. If you are holding, ignore the noise. The laws of physics are finally taking over the paper market. The wolf is here. Just make sure you don't get eaten.